Are you looking to pay off your mortgage and own your home for less? Well, a home equity loan might be the solution that you're looking for. But before you jump in, there are some things you need to know. Let's start with the basics. Home equity is the amount of money you own in your home, based on its current market value and existing mortgage debt. So if you bought your home for £400,000 with a 20% deposit, your initial home equity is £80,000 or 20%. As you pay off your mortgage, your home equity will increase. But keep in mind, your home equity can also go down if your property becomes less valuable due to external factors. You can take out a loan with a lender relating to the amount of equity in your home, but if you don't make the repayments in full or on time, the lender could foreclose on you and force you to sell your home to recover their money. Most lenders will allow you to borrow up to about 80 to 85% of the equity in your home. And yes, it is possible to use your home equity loan to pay off your existing mortgage. Sometimes these loans have a lower interest rate than your existing mortgage, meaning you could save some money by using a home equity loan to pay off the mortgage. So how does it work? You might be able to take out a home equity loan and access a lump sum to pay off some or all of your existing mortgage. If the interest rate is lower on the home equity loan than on your mortgage, you could save on your monthly repayments. But keep in mind that you should take into account other fees, such as a home equity loan's closing fee, which can be around 2 to 5% of the total loan amount. Alternatively, you could consider using a HELOC, which is a home equity line of credit. This is a loan based on your home's equity, but it's provided as revolving credit, not dissimilar to how you'd access credit from a credit card. The HELOC would be used to make frequent payments towards an ongoing mortgage. This is beneficial if the interest rate is lower than your current mortgage and any home equity loan products. However, it includes an element of risk because HELOCs typically have a variable interest rate that could increase. Now, let's say you've used a home equity loan to pay off a significant amount of your mortgage or completely paid it off. Can you use another home equity loan to pay off the existing one? Well, it would be very difficult unless the initial loan was only for a very small percentage of your home equity. Whether this is possible will depend on how much equity is left in your home. Lastly, you might be able to take out a home equity loan on a home that you have already paid off with no existing mortgage. Lenders might be able to take out a home equity loan on a home that you have already paid off with no existing mortgage. Lenders providing a home equity loan on a property without an existing mortgage may be more inclined to offer lower interest rates due to the decreased risk. But keep in mind, however, homeowners can still be denied home equity loans even when they have no mortgage due to elements of their financial profile. So can you use a home equity loan to pay off your mortgage? Yes, you can, but make sure you consider all the costs associated with this method before making any decision. If you're interested in finding a loan for your circumstances, then simply click the link in the description below and fill out the short form. It contains a few questions like whether you're a homeowner and how much you'd like to borrow, and it will give you access to quotes from around the UK, tailored to your circumstance. It's totally free to do, and of course it won't affect your credit score. So click the link in the description below and fill out the short form to try it out.